All right, so we are here at EthDenver. We had HBAR just this past Tuesday. For today's show, we're going to cover all kinds of things. We have the HBAR-backed ETF. We also have a SWIFT that looks like they're doing some things with HBAR. And we also have a Shark Bites that we recorded live at HBAR, an absolute blast. I'm Brandon, the HBAR Bull, here as always to bring you the latest in the HBAR ecosystem. But as always, none of this is financial advice. Use it for entertainment or educational purposes only. So we're going to start off. We had an interview that we just got done with Greg Bell of the HBAR Foundation talking about that HBAR-backed ETF. So I am here with Greg Bell with the HBAR Foundation. He is focused on financial markets, and the one thing that he's been focused on most recently has been the Canary Capital ETF. He gave a great discussion with Stephen from Canary Capital at HBAR just a few days ago. Greg, how has that process been to this point? I know you've been really integral in making that come to fruition. What's that look like?
You know, it's really the intersection between traditional finance and Web3 comes in really two flavors, right? It's, are you bridging a crypto asset and wrapping it in a traditional format like an ETF and making it available to a larger audience and those that have brokerage assets? Or inversely, are you taking a traditional financial asset and tokenizing it and making it more accessible and function in a Web3 environment?
Sure. So
I think there's a real need and purpose for both. As it relates to the HBAR ETF, and certainly NASDAQ's filing last week of their 19B4, this is a big step towards making HBAR accessible to all the wealth that exists today in traditional brokerage accounts. And so when you think about, the generational wealth that is held in traditional ETFs and stocks and bonds and whatnot, you've got, I think, around 15 trillion of assets that are sitting in ETF format, right? And I mentioned this the other day. When it comes to assets that are in the crypto space in the ETF format, we're only at around 100 billion or so. So there's really just the beginning that's just got to go in here. And so, it's working with the institutional players that are in these markets, which has been really beneficial to HBAR and all the work that has been done historically with the governing council and the brand recognition here. And so I'm really excited about introducing HBAR and introducing HBAR to a whole new population who already knows the IBMs, Googles, Dells of the world, right? Who already has an affiliation with these brands. And to be able to now give them a new product that is interacting with Web3 in an institutional way, I think is a real game changer.
When it comes to who holds most of the wealth, you're talking about boomers, you're talking about Generation X and the older millennials.
Yes.
I've always felt like HBAR and HBAR would resonate more with them. And now with this traditional wrapper of an ETF, they're going to get that much more access, right?
Well, that's the idea. I think the way that we saw Bitcoin come to market over the last few years and the acceptance that has grown through just the various distribution channels. And so that's the gateway drug. And I think that's been the way for most of us that are in the Web3 ecosystem is that, the first purchases are Bitcoin, right? And then it's exploring what other assets, what other networks can provide in terms of unique utility or functionality. I think that same process is going to, be followed through brokerage. And so those that are gaining exposure to the Bitcoin ETFs will say, all right, I've enjoyed this experience. Hopefully it's, been quite profitable for them. And then what are the other avenues by which they can gain exposure to the Web3 economy more broadly? And the HBAR ETF will be one of those avenues.
And it's going to be one of the first. So we already have the Bitcoin, which is probably one of the most successful ETFs in history, right?
Yes.
Ethereum has been fairly successful in its own right. Now we're getting the combined Bitcoin Ethereum ETFs. Yep. The next ones up on the list look like it's going to be Litecoin, potentially HBAR. And from what I heard from Stephen the other day, even though people expect Solana, that might not come to fruition too quickly, right?
Yeah. Well, anytime that an asset manager like Canary Capital is bringing a new product to market, they have to engage with the SEC. They have to engage with the exchanges, in this case NASDAQ for the listing of the HBAR ETF, and a variety of different other institutional players that enable distribution of these assets. So those are the Fidelities, the Schwabs, the Pershing, the Sleet, Bank of New York, and SEI as other examples. They really are the gatekeepers to a large population of either investment advisors or individual retail that has capital on brokerage accounts. And so it's working with all of these parties to collectively. And I think there's a feedback loop and there's a process. And certainly with Stephen's experience having brought the Valkyrie Bitcoin ETF to market, has certainly helped in terms of knowing the road, knowing the path, knowing the players to facilitate new products in the market.
Now, I'm not going to ask you to define this, but from what Stephen was saying the other day, the kind of feeling I got was, this could be 2-3 months out that we could potentially see this come to market. Well, I don't want to put you on the spot.
Yeah, I mean, so what there is within any regulatory filing is a very clear roadmap whenever there is a filing that is occurring here. And so there are feedback loops, there are timelines that need to be met. Now, of course, those can be extended. There can be denials. There can be various parties that say, we need to see certain things changing. But often it's around regulatory disclosure. It's around ensuring that the right parties are in place. And I think that a lot of that hard work has been done by Canary Capital and the ecosystem and participants that they have put in place in terms of custody from Coinbase, custody from BitGo, administration from US Bank. And the NASDAQ providing it the exchange listing. So there's a lot of amazing work that the Canary Capital team has done. And as a participant in the Hedera ecosystem, it's just very, very exciting because it grows the ease of accessibility.
Sure.
Right? That's ultimately what this is about. There are many people that have an interest in getting exposure to a Web3 ecosystem, to Hedera specifically. Mm-hmm. But the obstacles relating to movement of capital, on-ramping to new service providers, dealing with self-custody or new custody providers, that's real friction. And so when you're able to embed it directly within a brokerage ecosystem and make it just a few clicks.
No question.
Yes.
Yes.
Game changer.
It's a huge on-ramp for potential HBAR holders. Now, I know it's a good thing when we start to see amendments being made. That means there's probably some dialogue taking place between the SEC and Canary Capital. The last thing that I want to ask you about, you hit on this in your discussion the other day, is you can have these ETFs, they could be a tremendous success like what we saw with Bitcoin, but they can also fall flat. So we want to make sure this one is successful. So for the HBAR holders out there already, what would you tell them to do to make sure that this is a success?
So, I can only speak from my personal experience, what I plan to do, and that's, calling up my broker and saying, hey, I would love to see the Canary Capital HBAR ETF available to me as an investment product for my platform. And so that's, reaching out to Fidelity, that's reaching out to Schwab, that's reaching out to, E-Trade and Morgan Stanley and, the various avenues by which people gain exposure to all of our different stocks, because they want to see client demand. And the reality is they have to respond when people are calling and saying, I want to see this product, right? It's making a list of various, demand. The larger the demand, then they move more quickly. And so we've seen that play out in the Bitcoin ETF space. And I think that same process holds true for HBAR. And then there are all the ecosystem participants as well. It's not just retail, it's also the industry. So what we've seen is exciting developments relating to futures markets that are coming with the CFTC regulated products. We've seen new, investment banks and other financial providers that are providing research on HBAR, providing new market making infrastructure. So there's a whole ecosystem that is already out there for traditional financial products that is now able to interact with HBAR, with this product, to the extent it comes to market, in a way that it hasn't been before. So that's really, really very exciting.
All right, so you heard what Greg said. Get on the phone with your brokerage because we want to make sure this is a success. I know personally I'd like to shift 20% of my HBAR holdings. If this comes to fruition and I have access to it, I'd like to shift some of those over to try to make sure that we have those capital flows into it. But Greg, thank you so much for the work you've put into
Well, I think that the ability to have some ETF products in retirement accounts is a really compelling reason.
Sure.
Because I look at myself and I say, all right, there's assets that I hold in various wallets on a personal basis, and then there are assets that I hold for retirement and that are in tax-efficient structures. And so the tax-efficient 401ks, IRAs, etc., like those are, usually these IRAs are ones that you have a little bit more control of and are tax efficient in the United States to be able to say, all right, I'm getting exposure to ETFs. And so to me, it's not necessarily a this or that, it's an and question.
It's a huge point. And the last thing that I want to ask you about is, it's certainly important to get people to want to come into the HBAR ETF, but I think a lot of people are going to want to say, all right, this entire crypto space is a little bit confusing. I just want to pick an index fund of all these different assets in one ETF. Do you think that's going to be the next step for Hedera and HBAR?
I'm excited. So once there's a single asset product, then I think multiple asset basket products are the natural evolution. And so, that's where you can get indirect exposure to a larger thematic play, and I would expect those to come.
All right, perfect. Well, again, Greg, thank you so much for all the effort you've put into this. The fact that HBAR is going to be one of these first altcoin ETFs is a tremendous success, so we appreciate it.
It's been a fun ride, and there's lots more of development, and the intersection of traditional financial markets and Web3 is only just beginning, so there's more to come.
All right, so obviously I'm back in my hotel room. Greg covered pretty much everything that was covered by he and Steven at the HederaCon event, but Steven had a post the other day that I thought was good to share. He was just going over his experience this week, and he said, I went to EthDenver for the first time this year. I've been saying ETH is outdated and lost its usefulness for 5 years. I wanted to explore this thesis by speaking with builders. Here's what I learned. For ETH, developers are long gone. Projects are still built on ETH because they have to. Interoperability will make ETH more irrelevant. Longtime supporters have seen the signs in the last year and have moved on. Solana is the chain of preference for builders leaving ETH. However, community is very disenfranchised on massive VC pumps and dumps as a major portion of the unlocks are occurring now. Most builders on Solana agree with my assessment that the all-time high has come and gone for this cycle, and they are selling their bags on any strength. For enterprise, everybody is talking about HBAR and XRP. Boring non-crypto people in legacy tech businesses like IBM. They offer different angles, but have reinvigorated builders. Interoperability is what all of these protocols are talking about. DOT was the favorite in 2020, but not a single person cares. 90% of the builders and protocols I talk to mention Axelar, a highly skilled team who everyone works with on the back end. And finally, other protocols. Devs who are leaving ETH or Sol, or who are starting fresh, all mention one of 3 protocols that they are either migrating to or exploring. More on this later after I see some actual movement. So it was great talking with Steven. He has some fantastic insights, and of course he's done us a great service by trying to bring this HBAR-backed ETF to market. So next up, we're going to go to Swift. We had a Swift representative on the panel with Rob. Of course, they were talking about payments, and I grabbed a few highlights for us.
Hey everybody, my name is Alyssa DiCaprio. I work for Swift as head of industry engagement, and before that, I was chief economist at R3. So my remit at Swift is largely to work with central banks and to work with payment market infrastructures to increase the speed of payments, increase the transparency of payments, as well as building out digital public infrastructure.
Lisa, can I go to you next? The Swift network is, world renowned for moving or messaging that enables money movement. Where are you seeing the key drivers for the shift to crypto payments?
I'm going to give you a very different answer.
Okay, cool.
So I think, from the perspective of cross-border wholesale payments, really where we see the drivers of stablecoins coming from is, first of all, just the existence of DeFi, right? So institutions, customers, clients, all of them see that it's possible to do instant payments, it's possible to do instant settlement. Why aren't we doing it in all of the different transactions that we have? So I would say that's very directly the first driver. And then the second driver, honestly, is really around the G20 goals. So the G20, which is only 19 countries, you're welcome, has a goal for 2027 that something like 75% of global payments are credited to the beneficiary's account in less than an hour. And so how do you do that with traditional payments? It's really challenging. So it's kind of straightforward. If you're doing this with digital assets, that works very well. If you're doing it with traditional payments, it's a little bit more difficult. So, one of the things that we find, for example, is that already 90% of payments are credited to the beneficiary bank in less than an hour, but then the actual account of the recipient, only 43% of those flows. 43% of the 90% are going into the beneficiary's account in less than an hour. And that's for reasons of batching, which you don't need to do with stablecoins. It's for a reason of closed payment systems. So maybe the payment went overseas, the system was closed at the time, so it's not going to get credited in an hour. And then different compliance features. So there's some jurisdictions, for example, where you need to pay the beneficiary before you actually credit the account. You need to call the beneficiary before you actually credit the account. That's going to take you some time. So these are the two main drivers that we see from a wholesale cross-border payments perspective.
Once we've got these drivers in place and we all kind of agree that we're being kind of forced forward with this new technology, you then get this kind of inhibitor, which is enterprise adoption. Yeah, so we all know enterprise change moves glacially. So how do those two things come together? What do you see in terms of the ability for enterprise to adopt this new technology? And if I direct that to you, Elisa, first, because SWIFT has this, probably the most glacial of change processes for obvious reasons. Where are you as SWIFT adapting or augmenting to incorporate this new technology?
Well, I'm gonna say there's really two levels of this. So the first level is internal, and the second level is external. So internally, right, we have message fields, we have things like this that need to be adjusted. So for example, if you're doing a cross-border payment, there's a drop-down currency menu. It's an ISO menu, it's not a SWIFT menu, but it doesn't have stablecoins in it. Yeah. So that needs to be adjusted. The size of the fields needs to be adjusted. Right now, well, we're in the process of making changes like this, but the size of the field will fit a BIC number. It won't fit a wallet address. So these are the kind of mechanical problems that we have to work through. So I think those are happening. And then the second level at which SWIFT works is with our with our banks, right? So SWIFT is just, we're the network, but really where the problems happen or where the changes happen is at the bank level. So a lot of what we're trying to do is make it easier for banks to then incorporate these new technologies and these new payment instruments. Yeah. So that's it's a combination of addressing the reasons for fragmentation, addressing the compliance issues. Compliance is hugely problematic for these banks because, of course, if you're using traditional rails, right, you have a certain way of doing compliance. If you're using stablecoins, you need to collect a different kind of data set. You need to know the person's mobile number. You need to know the place of residence. You need to know the place of birth. These are things that you don't collect in a normal bank transfer. So with compliance, that's a problem. We're trying to help our different banks deal with that. So I think it's really around these two levels. It's both internal, which is fairly straightforward because we're a company, you can change those things. And then it's external, which is how do you change all of the different nodes in your network and make it easier and less costly for them. As an example, right, there's 120 plus, somebody in this room knows this correct number, different wallet providers. If you're a bank, do you think you're going to integrate with 120 different wallet providers? Of course not. That is hugely expensive. But if we can provide a way that they can integrate maybe with an aggregator or some other way, then that would make it cheaper for them and make it more straightforward for the entire industry. So this is really where we're looking. We've done a lot of POCs, kind of live trials, to understand where the different pressure points are and where the frictions are and how they can be addressed.
Yeah. And 2025, you've got a lot of live trials coming up because we were talking
Absolutely.
to your team just last week, and some amazing stuff coming up. To be a bit more pointy about it, what do we need to start with right now that will make the biggest change, and where's the low-hanging fruit?
Okay, so I think that's a good way to think about it. I think in standards, a lot of what I was talking about earlier is already well in motion, right? So for example, what kind of data are you collecting? What do you need? How are you doing compliance? How are regulators doing this? This is all in progress. I think the question of interoperability is a little bit more tricky, right? Because what we're seeing with stablecoins is this explosion of new types of financial instruments, which is fantastic, but it also increases complexity enormously. Yeah. And so how do you simplify that so you make sure that there's still a stable flow, right? And you make sure that everybody can access this, because right now that is definitely not the case, right? You certainly have different sectors that are using it heavily and some sectors that are not using it at all, but that should be using it. So I think in terms of, we've focused a lot on financial fragmentation and how to reduce that. And it's not just a story about one company doing it. It has to be a collaborative effort. One of the things that we're doing is working very heavily on digital public infrastructure. And this is interesting because this is the idea that you have institutions and you have governments which traditionally have not built payment rails, right? Payment rails are often built by the private sector and sort of backed up by the public sector. And now we see the public sector saying, oh, there's all these things going on. We actually have to be involved in this. And you see this movement of national payment systems, of different regulations about AI and DLT and stablecoins. And so how are all these things coming together? And so we're really working to collaborate with different institutions and different governance now on the public side to see how that can reduce some of the problems with interoperability that we have from this hugely fragmented sector.
Now, there's a couple things that jumped out to me here. Number one, it sounds like from the grumblings, even though we don't know for sure, that there's a reason why Swift was at HederaCon. Probably because they are doing something with Hedera, but time will tell on that. Now, XRP has achieved a 9-figure market cap on the possibility of nailing down the cross-border payments business. I've always thought that Hedera would compete well on that front, and here we have an indication that Hedera may be even more formidable than the market had considered. If the Hedera network can nail down that business, it would be good for 48 million transactions per day, before the added efficiency has the potential to make Swift transactions even more attractive and increasing that volume further. The other thing is, we often think of Swift almost as like a governmental agency, but it's not. It's a private company. So this is somebody that could actually come onto the Hedera Governing Council. We'd obviously love to see that. All right, the next thing we're going to jump into is in just a few hours, we have Karate Combat 53. And I was lucky enough to grab Postmaster, who is not only a huge Karate Combat fan, but he's actually been in the pit. So let's take a look what he had to say.
We have a Karate Combat event coming up just tomorrow night. That is Karate Combat 53. And here we have Postmaster, who's not only a fan of Karate Combat, but you've actually been in the pit, right? In the Influencer Fight Club. What was that experience like?
Man, probably one of the greatest experiences you can have as an athlete. The show in Thailand was second to none. Beautiful venue. Karate Combat really takes care of their athletes, and becoming an athlete from being a fan, getting to fight with all of your heroes watching, looking down on you. President Awesome, Bo Cow was watching my fight. So it's such an amazing, magical experience, Brennan.
Awesome. So the next thing that I want to ask you about is, you did it, of course, that's amateur.
Yeah.
Now, I think they give you some compensation for it, so I guess technically but you have some skills that are a little bit above most of those influencers, right? So the next step is, or I guess the next question is, are you thinking about turning pro?
Absolutely. In fact, they actually counted that last fight as a pro bout, Brendan, because
really?
Me and Michael Heckert both have pro fights, so They couldn't step us back to amateur. So even though we fought into the amateur rule set, the 2-minute rounds, no elbows, the commission still counted it as a pro fight, and they are actively looking to have a 3-round fight for me. So really looking forward to that.
Awesome. If you could fight anybody in the stables of Karate Combat right now, who would it be?
Hey, I got my eye closely on the welterweight fight tomorrow night, the Joe Bracken.
Mm-hmm.
I think he's a really good matchup for me, and I think I'll call out Joe if he gets the W.
Awesome. Okay, so not only are you a fighter, but you're a fan, like I mentioned. Is there anything about this upcoming event that's caught your eye, anything that has you interested?
Man, Arturo Vergara, obviously, the champ. Lots of controversy around his opponent backing out, so I'm really excited to see who President Awesome was able to fly in short notice to take on the champ. That's obviously really cool. Also, we have the big man Robelis coming back. Mm-hmm. The guy's got like 20 seconds of pit time, but super exciting. So that's going to be an amazing co-main event. Can't wait to see someone get knocked out.
He's a minus 4,000 favorite, which is just crazy town. I think this guy might be a little bit tougher test than the last two guys, but obviously the betting odds are pointing towards Robles again. So I guess the last thing that I want to ask you is, from an up early gaming perspective, what are you looking at for Karate Combat 53?
Well, there are definitely going to be some underdogs that you want to keep an eye on. I really think that Weber Almeida is going to steal the show. I think he's co-main event. The dude's coming off 3 wins. He's fighting a very tough opponent in Pryor. And both of them undefeated should be fireworks. So really looking forward to that, man.
Absolutely. I've watched Paye fight a couple times. He's French, and they call him like the knockout artist or something like that. So that was absolutely going to be fireworks. But tune in for that. It's free. You can check it out on YouTube. Thanks for stopping by.
Thank you, Brandon.
So now let's jump into that Shark Bites that we recorded live at HederaCon. It was fun to see people come up and ask Rob their questions. The thing that was also fun to watch was normally we do have those questions beforehand. So Rob can do a little bit of preparation beforehand, but Rob does just as well when it's live. So let's check it out.
All right, so we are here at HederaCon, and we have Rob here live. First time I'm actually meeting him. We have some people lined up here ready to go with some questions. But Rob, before we get to the questions here, what do you think of HederaCon?
It's so fun. It's 1,800 responses for HederaCon. The day is rammed with people. There's panel after panel after panel on 2 stages. We've got Manson Lehman just walking the floor, answering questions. It couldn't be better. It's such a good day.
Just being able to meet people and make those connections and see about different ways that we can collaborate. This is absolutely invaluable. But the first person we're going to bring up here is a builder in the space, Glenn from Inara. Glenn, come on up.
Hey, Glenn.
Hello, Rob.
Hey, how's it going?
Oh, super good. Well, wow, what an event. It's fantastic.
It really is.
So good to connect with people and meet them face to face. A lot of people that I've only communicated with online. And so good to make this connection.
So, Glenn, do you have any questions? I know you're into the micropayments world, and of course, we've got the payments guy right here. Glenn, what do you have?
Just an open question about the past, present, and future of micropayments, particularly in relation to consumer dApps, or however you would like to address it.
Okay, wow. So all these questions are I don't know.
Improv,
right? Entirely improv. So micropayments, as everyone knows, is my favorite use case for Hedera. It's the reason I was attracted to Hedera in the first place. I don't think there's any one answer. We've tried different architectures for micropayments. So back in the day, there was an architecture using AppNets and HCS that we kind of inherited. In fact, the very first micropayments proof of concept we did at FPOS was using that architecture. And that, of course, is 100th of a US cent, using HCS. It has centralization kind of challenges because of the way that the AppNet was built. But it was perfect for super tiny payments. And I think that would suit transactional Internet of Things and device-to-device type high-volume use cases. So I think that's going to be a thing over the next couple of years. We're currently experimenting with HTS, but not just HTS, with stablecoins. So Hedera-based stablecoins used in the Stablecoin Studio, which are, as you probably know, HTS tokens with additional functionality extended through smart contracts. Those are really good for programmability, for maybe higher order use cases, and we're experimenting with things like rewards platforms. So 1/10 of a US cent, so you can attribute true value to rewards points, and then they become micropayments. We looked at we've got a recycling scheme in Australia called Return and Earn, where you get 10 cents for bottles, right? So I get 10 cents back as a token. That's effectively a micropayment. I can go and use that token for, to purchase something else. So I think what we're getting now in the micropayments space is not that kind of streamed value for streamed content use case, which is still a good one, daily timestamp and everything else ever since. But I think because traditional payments infrastructure costs a lot of money per payment, we can innovate the hell out of this entire space using this technology. And micropayments for me is where we start, because we build up on those rails, and you end up incentivizing all sorts of different models through the transfer of value. So amazing. I'd go on all day about this.
Absolutely. Well, that's one of the things. Glenn, why don't you tell Rob what you do with Inara?
Oh, thank you. Yeah. We have a consume what you choose micro consumption model of content. It's a micro content consumption, monetization, and tracking solution. It's live. We developed it with Drop.
Okay.
We use the Drop digital wallet. Works very well.
Yep.
And now we're in the middle of a transition from a pure publication model where you take a large publication. Historically, what we've done is take a large publication or a medium-sized one, and we allow the consumer to choose portions of it and only pay for what they choose to consume. So recently, what has arisen for us is a number of potential use cases in the sports industry, which we're now pursuing with an organization called the Underground Bowling Association. They have 11,000 members across the United States, multiple leagues, and we're really excited about that. And so we're developing that use case and that model and looking to other sports where there is a large user participant base, but could be at the amateur or semi-professional level, but also at the professional level too. And thinking about where content factors into all of that.
Yeah.
And where we all have our passions and our interests in sports, obviously, a lot of passions and interests in sports. We participate with our family, friends, and a larger community, whether it's a community of interest or a community of practice.
Yep.
And content then uplifts our skills and our knowledge, which we all do. So any way that we can facilitate that, and maybe microtransactions and content micro consumption could contribute to that. And then, of course, we look to ways that we can be rewarded.
Yes,
in that process. And so it all fits together. And again, this HederaCon is enlightening, and we're just really excited to be here.
All right, Glenn. Well, we appreciate you coming up here. Tony, why don't we go to you next?
Thanks, Glenn.
You got them lined up, ready to go. Tony, how are we doing today?
Good to see you, man.
What question do you have for Rob today?
I have.
Coming a bit closer, I think.
Yeah.
Good to see you.
Yep. Good to see you too. Great. So, I have a question that I don't want to put you on the spot because I know your position, but I'm curious about the roadmap for rolling out stablecoin payments nationwide. What could that look like? Because we're working on that here in the U.S.
Yep.
We're solving for payments in a very regulatory constrained space, legal cannabis, but we're doing that in order to create a solution that we can take out to the world. And so I'm curious about what your vision is for what does that roadmap look like? What does the rollout look like? You can't just do it all at once.
In a place like Australia, maybe.
Well, not even in Australia, right? So stablecoins are proliferating. Those who saw me on the stage earlier said that the surprising fact that 2024 had more value transferred using stablecoins than on Visa and MasterCard. The $26 trillion in value was transferred using stablecoins last year, as opposed to $23.5 trillion for MasterCard and Visa. That's incredible. And anyone who doesn't believe that stablecoins are one of the killer apps for the Web3 space is deluded, in my view. But there are different forms of stablecoin, as we know. So from a regulatory perspective, the super squeaky clean ones, the ones that are fully fiat-backed or in short-term T-bills or whatever, something liquid, are going to be far more likely to be accepted into a jurisdiction such as Australia or US or wherever. The banks that are, the pillars of the traditional finance space are looking at other forms of digital money which are not stablecoins, right? So tokenized deposits, which are claims against the bank's balance sheet as opposed to claims against a, fiat in escrow. It's kind of the very simplistic differentiation. So banks prefer deposit tokens or tokenized deposits, but the technology is the same, right? So it's just the way that you back it, the way that you redeem it. But what we need in that kind of space is how does my, dollar-backed stable
get interchanged for your bank's red coin or whatever. We need rules to say that the singleness of money between those two types of token is maintained. The parity is maintained, because otherwise you've got price differentials, and then you've got other different dynamics that kind of drive it out of control. So what we're looking at is what's the legal framework, what's the rule-based framework, and we call it a scheme, right? So schemes are what hold members to account for participating in those kinds of organizations. So you might have 150 members. In AP Plus, we have 150 members across our different schemes. They all abide by a sets of rules. The underlying technology is the thing that supports those schemes. So I think my vision is that a world where we need these digital forms of money to be interchangeable, even with FX smart contracts or some other way of kind of exchanging them, will need a rules-based legal framework to make it work properly. There'll still be stablecoin issuers outside of those frameworks, and some will work and some won't. But we don't have any of that at the moment, and we're experimenting on what that might look like in the street.
Good stuff.
Yep.
Tony, can you do me a favor?
Yeah.
We have a few other people here that are ready to ask questions. Do you think you could go drum up a couple other people to come on down and see
questions?
Yeah.
Okay.
Absolutely. I'll do my best. I appreciate it, too.
Thanks, guys.
All right, Sean, why don't you come on down? Hey, Sean.
Nice to meet you.
Nice to meet you, too. All right, Sean. Well, thanks for coming up here today. Pretty much let's get right to it. What's your question for Rob here?
So, Rob, stablecoin follow-up, coincidentally.
Okay.
So are you anticipating that there's going to be a global standard? Or, because right now we're on the precipice of having this bill in the U.S., which will be amazing. And then a follow-up question to that is that with interoperability and the complexity of many, many platforms and ledgers, do you anticipate that at some point there will be an anointed set of winners, meaning that there may be hundreds out of the gate, but slowly but surely they'll whittle down to a handful of winners? And what do you see?
Well, I think that's natural, isn't it? It's the survival of the fittest, the ones that are most adopted, the ones with the most utility. As you've probably heard me say many times, the coins inherit the underlying properties of the networks on which they're issued. So one is not like the other. So you might have a USDC that's issued on Ethereum and one issued on Hedera. Only one you can use for micropayments. Only one that you've got low predictable costs, right? So the use cases that you can use stablecoins in are predicated on the underlying infrastructure. So you need to be able to understand that before using them. Otherwise, they simply won't work within the context of the use case. I think that's one of the things that will start thinning the herd. To your question, I'm certain that Hedera will be amongst that final batch. And then you asked about standards. There is a stablecoin standard. There's an organization called the Stablecoin Standard. They're focused on non-US dollar denominated stablecoins, around the world. And we must remember, stood here in Denver, there is a rest of the world, right? And there are uses of stablecoins in local currencies that are entirely legitimate. So we've seen the Philippines stablecoin just recently that FSCO has launched. We're about to do AUDD in Australia on Hedera. So there will be many of those. And I think local coins for local use cases works very well. But they're also programmable. So you can do FX, you can build FX into the flows too, and inherit all of the benefits and the optimization of the technology that you're using. So I think I don't see stablecoins as a use case. Stablecoins are a primitive. They're an enabler. They're the data packet, if you like, that's being passed around. It actually carries value as well, of course, that enable the cool use cases that we're going to see. And I think we'll see stablecoins used in use cases that we hadn't anticipated in the past. and may not even know that that's the underlying kind of mechanism that is being used. I mentioned reward points earlier. If you can attach true value to a reward point, then actually the rewards, and in an open system, open circuit system, all of a sudden you've got effectively micropayment infrastructure that you can incentivize people to to loyalty or to reward them in other ways. So it's fascinating.
And we're also already starting to see infrastructure built around that. We have Nomad right here.
I've got Nomad.
Yeah.
So Milan gave me a little Nomad terminal. I'm going to be showing the foundation guys tomorrow some use cases that we built on it. Actually, a rewards platform.
Mm-hmm.
And Milan assures me that this can get far smaller than this. It's a Raspberry Pi inside.
Well, he makes it himself.
He makes it himself in his. But it's super cool. Right? And look, and it switches on as well. So yeah. So this is convergence of technology for brand new use cases. So who would have guessed a year ago that you could have a distributed application, a decentralized application using stablecoin, studio-based stablecoins and NFTs in an app that you can pay directly on a terminal like this with. So what I'm going to be demonstrating is just exactly that. So it's super cool.
It is cool. Absolutely.
Well done, Milan.
Thanks for the question. We appreciate it. Brandon, please come on down. Joe, if you could do me a favor and see if Brady's ready to come on down. I know he had a question as well. But now we have a Brandon, the other Brandon.
We have a proliferation of Brandons here.
I know. There's too many of us around, but that's all right. We've got some good ones around here. We'll give it a minute until Rob's ready to listen to your questions.
Sorry, go ahead.
No, all good. What do you got for us, Brandon?
Okay, so Rob, I'm very curious. I watched the last Shark Bites. You were talking about ecosystem metrics and all these different things about measuring activity and health of the network. And so with this work that you're doing, I'm really curious to learn more about that. And I think that this is a interesting aspect of the network for people to learn about, actually tracking the health of the Hedera network. So I'm really interested to learn about that.
And super important, really, really fundamentally important, because metrics, if you can't measure it, you can't fix it, right? So as we all know, we've had 3 core metrics since, before day dot, which are TPS and active accounts and TVL. So what I believe, and have consulted with many members of the community, yourselves included, and Brady was a touch point last year when he did this open letter kind of bemoaning the fact that we aren't looking in the right places for the health of Hedera or otherwise, because if you don't know, then you can't fix it. So I took it on myself to start briefing the governing council through CorpCom, which I was co-chairing last year, about that. It was part of a series of kind of community-based briefings. We did DeFi 1 with Tudor, and we talked about metrics. With the governance change within the governing council that was affected in December, CorpCom has become UseCom, the Network Utilization Committee, and I have the honor of being the chair. And so we're presenting our objectives for 2025 to the Governing Council next month, I think. And one of those objectives is to include new metrics into our dashboard so that we can track and monitor. And UseCom will be gathering that data and presenting it to the council every month, every meeting. My number one priority, I think, is to get onto RWA.xyz. Because I think none of what we're doing, all the amazing things that we're doing in tokenization, is being tracked where the Web3 eyeballs are. And you've got to be where the eyeballs are, because otherwise, it doesn't count. Yeah. We stay on an island and we love ourselves on our island, but no one else cares, right? We've got to make other people care. And so that's the first thing. We've got a list of platforms that do get the eyeballs, and we're going to work with the foundation, we're going to work with Hedera, and other ecosystem partners to make sure that we've got all the integrations right so we can be up there on those leaderboards. Love it.
All right, so the next thing, I'm going to ask both of you guys a question. If anybody out there has a question, you want to raise your hand, you can come on up. Just let me know. And, Absolutely. You're coming up next. But I do want to, now I'm scared. I do want to just ask you guys a question again about HederaCon. What's been like the most profound thing or the thing that's surprised you most about this event so far?
I think that for me, it's kind of like I was saying on the panel, which was it's the people. This is a story about a really energized startup ecosystem at this point, with people moving across different companies and startups, and then these executive leadership teams kind of forming organically at these companies. And so even at HGraph, we're at that stage as well, where we're bringing on a new head of business development, different things like that. And that's the most exciting thing for me, is seeing all of these familiar faces that have been here forever, energized at new companies, doing all these exciting things, but then also even more new faces that I've never seen before.
Agreed.
That equal that level of enthusiasm. And I think that that's kind of what's been the big thing that's resonated for me here. Was I was thinking it was going to be something about this technology or Blockstreams or Blocknodes, all these things, they're so cool. But for me, it's just been everybody's at a new level of energy like I've never seen before. So that's been incredible.
Agreed, absolutely. Thank you for coming up here, Brandon, and answering your question. Rob, what about you? Has anything struck you about being here?
It's the conversations. I'm just looking down the corridor here, and you've got Jim Nasser and Eric Piscini and Kabila kind of talking about something. You know, don't you want to be in that conversation? Don't you want to know it?
Yeah.
All of those little conversations that are happening, and people are bouncing off each other, and there's smiles everywhere. It's just magical.
Absolutely. Tony, how are we looking? Are we still in the frame?
Yeah.
You good? All right. Sounds good. Well enough. You got an old friend here.
Okay. Mr. Fair, hello.
All right.
Now I'm scared.
Okay.
Oh, what do you have for us?
So actually, I don't know if this is an easy question or a hard question, but probably an easy question for you. I was just wondering, what is the number one thing that you want from me and my team this year?
Oh, wait, you might want to explain who your team is and what you guys do.
So my team would be Hashgraph, the engineering team that writes the software that's used by Hedera. So
Can I do two answers?
yes, sir. But I might only do one of them.
Okay. Hash the interoperability with public networks, because we really need that, and community nodes. Because I said that because I know the community wants community nodes. What the community tends not to understand is that the first phase of community nodes are going to be whitelisted partners who are not governing council, but it's a promise that needs to be kept.
Yep.
I believe. And I think over time it just demonstrates that we're on the right track. And as you know, going to community nodes is a lot of work, because you've got to get all the tooling in place. You've got to ensure that these things can be stood up and calmed down, and without very much manual intervention. But once we're there, I think we're in a good place. And then there's a long list of hips that I'd like to see, but they're going to Hiro these days rather than coming to you.
Right. But I'm on the technical steering committee.
You are indeed.
So I'll still see them there. But I think those are both really great. Really, both of those are really great asks. I think it would be the thing for me about the community nodes is that it's sort of like an essential part of the ethos of decentralization.
Yeah.
Like, it really just needs to be opened up, that where people can get. But like you're saying, there is a lot of work that needs to be done, and we're working on it heavily.
I know.
We're doing work on the dynamic address book stuff we talked about earlier today, which is one of those prerequisites. And then there's we're actually also working on a new gossip layer that will give us tremendous performance and give us really good support on alpha. Yeah. There's some good stuff coming. Right? There's good stuff coming, and is sort of also necessary prerequisite in order to create a system that's going to work really well with arbitrary keys.
Yeah. And you need state proofs for those things, which opens up all of the other kind of...
So all the block node work that we're doing is going to enable the state proofs and the interledger communication, which we'll need for the spheres and the everledgers and talking.
Yeah.
So...
Well, one thing about having community nodes is it's not just about keeping a promise, because if we get to the point where we start to scale, and it might happen really quickly one of these days, we're going to need to shard. And when we shard, we're going to have what's the optimum number of nodes per shard? Is it 40? Is it 100? Is it 500? Either way, we have to have whatever that number of, at least the minimum for each one of those shards. So it's not just going to be a nice to have. It's going to be a necessity coming up here pretty soon.
Yeah, and there are other things that people don't really talk about because we haven't got there yet. But what happens when a governing council member rolls off the governing council?
but wants to maintain, the node or keep running a node, right? So they wouldn't be part of the 39, but they'd be part of, an outer ring. So it's got to be ready for them as well. And everything else, right? Those that are coming in when we've got a 39, full 39 council, maybe they can suck it and see if they've got the community node there to try out. I don't know, but there are lots of reasons to have it in place in the next year or two.
Great points. All right, thank you. Thanks. Is there anybody else that'd like to come up and ask Rob a question? Anything on the HBAR?
Joey.
Brady's on the main. That's fine. Anybody else? If not, Rob, I guess we'll go ahead and wrap it up.
Thank you.
Thanks for doing this live Shark Bites. I hope we can do a lot more in the future.
I do too. Thanks.
Absolutely.
Just
Next up, we have somebody that is in the Hedera space that is not only a builder, but he's been really involved with the Hedera community from almost day one. His name is Andy, but you might know him better as HBAR to the moon.
All right, so we are again here at EthDenver. I'm here with Andy, longtime HBAR parian, and also, of course, a builder in the space.
Got the 1 center coin.
Got the 1 center from back in the day. He also has created the only hardware wallet that's native to the Hedera ecosystem, Citadel. Andy, can you tell us a little about Citadel? I know you just had some big things that just happened with it. Mainly, it's actually getting in people's hands, so tell us about it.
Yeah, first of all, we're building a Hedera native hardware wallet. No other network has a native hardware wallet. What it means is we're not going to support just simply HBAR transfer or some of the tokens. We're going to provide full support for the network, smart contracts, ACS, scheduled transactions, secure trade, all of this good stuff that comes with the Hedera network. It would be a disservice if you can just do simple HBAR transfers. That hardware wallet is not really that interesting to me. I want to secure everything that I'm doing within this Web3 ecosystem. So we've been building for like 2 years. We finally went to market early this year. Thanks to all the supporters from the community who pre-ordered the devices. And thank you for being patient and patiently waiting, because it took a long time to get this out. Shipped close to 500 wallets to the community members. They've been playing with it, providing really good feedback. We're supporting 90% of the services on the network.
Okay.
Next step is to collect all that feedback, improve the UI, and add support for dApps like Sausage One, Danzo, Centex, Kabila, so they can do all this other stuff with the hardware wallets. We also partnered with Hashback. Hashback is the most popular and favorite community wallet. We didn't want to build our own personal wallet application that talks to the hardware wallet. So people can simply just pair with Hashback. All the transactions that they will sign will flow through the Citadel wallet, sign it, send it back to Hashback, and Hashback submits. So thanks to Hashback as well for being the strategic partner. We're out there. Things are going well. We're getting, people love it. Especially I was sharing the wallet with people here showing. I have some in my pocket here.
Oh, perfect. That's the other thing with these wallets. They are so much more user-friendly than the Ledger. You think of Ledger, this huge company, and the UI of actually using those hardware wallets is horrible. This, it's intuitive, it's full color, touch screen, all that kind of stuff, where it almost feels like I get concerned using the Ledger because it feels like it's going to mess up, right? But then using the Citadel wallet, which I have one, it's so much easier and it makes you feel more comfortable with
Thank you, Lloyd. Thank you. That was my goal. As an entrepreneur, if you're not developing something, first of all, for yourself, fixing a pain point for yourself, you don't really have a skin in the game, you're not really that passionate. I got into Hedera and I was looking to securing my assets. Ledger is the most popular one, started using Ledger and never used it again. So I'm like, what's the point? If it's secure, but it's horrible to use, frustrating to use, I don't really see the transaction information on the screen. What am I signing? Who knows? And that's why, and being an electrical engineer myself, I decided to, who better can, even though I had never built a product like this before, so it's a big undertaking, even though you have electrical engineering background, I still jumped in. I got inspired by other community members who started building things, including you, Twigital, and other things. All of us started as influencers, as supporters of the network, and got excited, sticked around, started building, and I think that speaks a lot about the technology, about the network. But this is what I'm offering from my perspective, hardware wallet to secure everybody's, and user experience is everything to me. Security, I'm not even talking about security as much because we did the secure audits, we know what we have built. User experience, user flow, product look, aesthetics, the way you hold, how you hold it, how it feels, the colors, customization, all of those things are so important, way more important than security. And that's why people don't use Ledger, they use Hashback and other software wallets, because convenience is more important than security. So if you're bringing a product like this, you better make sure that user-friendly is on par with the software as options available out there. Otherwise, you're not going to be able to serve.
It makes perfect sense. And of course, the pain point with those wallets, as you said, it was not having Hedera NFTs, HTS, staking, all that kind of stuff. And this supports all that kind of stuff. The last thing that I just want to get into here is, how is your experience both at HederaCon and here at EthDenver been?
HederaCon was top-notch, really well done organizationally. So many people. I think I didn't know the exact number. I was talking to Rob, he said 16 to 1,800 people. It was packed. Talking to community, a lot of new faces, a lot of people that we know from the community. Big stage, beautifully done. And what I loved is that the focus was on the retail mostly. Most of the panels were community projects, retail projects that have been building, Hashback, Inbuilda, yourself, other community projects that have been building. They were front and center and the focus of the event. And that's why I loved it. It shows the shift and the mentality. We want them to do all the enterprise side, go crazy with enterprise. But seeing this shift to the retail, focus to the retail is also very refreshing. I haven't seen anybody that was not pleased with the event. And everybody's excited for the future now, seeing this big change. And Charles Atkins made some interesting announcements, community-focused announcements. It was fun. And all the drinks and food and all that stuff was good event. Can't compare with EthDenver. EthDenver is like, everybody's here, all kinds of projects. That was really intimate. I really loved HederaCon. Nothing comes close to that. Here we just network, talk to different people, see what comes up. But your collection too. You're doing an amazing thing. It's a really interesting use case what you're doing. Creator gives so much value to the community. And nobody is, like we're doing podcasts. I keep telling Jack, this guy is a pro. We're just regular.
One of the things with content creation is there's always, some vertical that isn't being properly filled. And you guys are filling a little bit different niche. You figure out, come up with your idea of what you want to cover. I want to be, the one go-to one-stop shop for everything, everything Hedera. Other people might focus on gaming. Other people might focus on real-world assets. Whatever it may be, there's plenty of places to.
So you are the go-to creator, really high quality, really professional. All the interviews and people trust you, and you are really good at what you're doing. So. Congrats with the launch of the HBAR Bull collection.
The Bull Bearing
collection. I think the community is going to keep supporting you because you just give so much value back to the community.
Well, that's what we're trying for. But Andy, thanks for stopping by.
Thank you very much. Thank you.
And with that, let's jump into the HBAR markets. Crypto has had a tough run this week, and Bitcoin saw a drop of over 12% on the week, even though it's only off slightly on the day. Considering that, HBAR has performed great. It's flat on the week and up 5.5% over the past 24 hours to just over 21 cents. This has allowed HBAR to move from number 19 to 14 on the CoinMarketCap list. It also appears as if we created a triple bottom. The next resistance is at 24 cents, then again at 26 cents. If we can break and hold 26 cents, I think we could be off to the races. That's all we have for this week. We'll be back in studio next week, and it looks like things are just getting started for Hedera and the HBAR, so we hope to see you back.